Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings. Today we're diving into Lucid Diagnostics' latest report. And let me tell you, it's less about diagnostics and more about a financial cliffhanger. It's like going to the doctor for a checkup and finding out you need a financial transfusion. So what's the big news? Lucid Diagnostics entered into an underwriting agreement on April 9, 2025. In plain speak, they're selling a bunch of their company stock to raise money. Think of it like a lemonade stand trying to stay afloat by selling more and more lemonade, even if each cup doesn't cost much. They're offering shares at $1.20 each. Now that might sound like a bargain, but it's important to understand why they need the money. They're selling 12.5 million shares initially, hoping to rake in about 15 million shares initially, hoping to rake in about 15 million shares initially, hoping to rake in about 15 million shares, initially hoping to rake in about $15 million before all the fees and expenses are taken out. To make this happen, they've got underwriters, basically financial matchmakers who are buying these shares to then sell to the public. The underwriters get a discount, so they buy the shares for a little less than $1.20. It's how they make their profit. There's also an option for the underwriters to buy even more shares, almost 2 million extra, within 45 days. This could bring in another $225 million if they decide to go for it. It's like saying, hey, if you can sell even more lemonade, we'll give you more to sell. This offering is happening under what's called a shelf registration. Basically, the company already told the SEC they might sell shares at some point, so they're pulling that plan off the shelf now. It's quicker than starting from scratch. Now the legal stuff. The underwriting agreement itself is included as an exhibit, so investors can see the details. But remember, these agreements are mostly for the benefit of the parties involved, not necessarily a full picture of the company's health. To keep everyone in the loop, Lucid Diagnostics also put out a couple of press releases about the offering. One to announce it and another to say how much the shares would cost. This is all about making sure everyone has the same information. These press releases are also included as exhibits in this report. You can read them to get the company's official spin on the situation. But always remember, there's often more to the story than what the company wants you to hear. Now, what does all this mean? Well, Lucid Diagnostics is clearly in need of cash. Selling shares dilutes the value of existing shares, meaning each share is now worth a smaller piece of the pie. It's a move that can help them stay afloat in the short term, but it also raises questions about their long-term strategy and financial health. As of April 2025, they're trying to raise capital by selling their stock, which is a crucial event for any investor to note. It can be a sign of trouble or it can be a strategic move for future growth. It all depends on how they use the money, but the need to raise the cash is quite apparent. Lucid Diagnostics seems to be facing a critical juncture. On one hand, they're pushing forward with their diagnostic technology, and on the other, they're struggling to keep their finances healthy. The company's direction is uncertain. Their strength lies in their diagnostic technology, but their weakness is definitely their financial situation. The biggest risk is whether they can turn their technology into a profitable business before they run out of cash. In conclusion, Lucid Diagnostics' recent stock offering is a financial lifeline. It's a move that could buy them time to prove their business model, but it also comes with risks for existing shareholders. Keep a close eye on how they use this money and whether they can turn things around. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more deep dives into the world of corporate filings.